In today's video, we're talking about how is Social Security taxed. A lot of people feel like it shouldn't be taxed, and some people assume that it's not taxed. But is it tax-free in every situation? No, it's not. Let's talk over the details coming up next. Hey, this is Tommy Neesmith. I'm a financial planner at Christy Capital Management, where our goal here is to bring good retirement information so that you can have a better retirement. If you want to work with a planner, please click up here. Today, we're talking about the taxation of Social Security. Is Social Security tax-free for some people? And the answer to that is yes, it is. Is it tax-free for everyone? No, it's not. Let's look at the requirements. So some of the numbers you're going to see here are for single filers, and some of it's going to be for married filing jointly. But if your income is $25,000 or less if you file single, or $32,000 or less if you file married filing jointly, then there's no taxation on your Social Security. And when I say your income, I mean your combined income. Here's exactly what combined income is. It's your adjusted gross income, or AGI, plus non-taxable interest, plus 1/2 of your Social Security benefits. So Roth IRA withdrawals don't count, but municipal bond interest does. If your combined income is between $25,000 and $34,000 if you file single, and $32,000 and $44,000 if you're married filing jointly, then 50% of your Social Security is subject to taxation. Make sure you hear the distinction. Your Social Security is not taxed at 50% rate. It just means that 50% of your Social Security income is subject to taxation at whatever your tax bracket happens to be. And if your income is $34,000 or higher single, or $44,000 or higher married filing jointly, then 85% of your Social Security will be subject to taxation at your tax bracket. Now, if you're watching this video, you're probably a federal employee or a federal retiree. When you do the math to figure out your first pension, along with half of your Social Security, and then if you're married, half of your spouse's Social Security, well, you can see that it's quite easy to get over the limit and have 85% of your Social Security taxed. I did some research on the internet to find some average payouts. The average first pension is around $1,800 a month. The average Social Security for a retired worker is $1,828 per month. The average spouse of a retired worker that didn't work themselves is right at $900 a month. If the spouse did work, it would probably be higher than that. When you add those three up, you come up with around $54,000 a year of income. That's clearly over the $44,000 limit, which means 85% of the Social Security benefit will be taxed. Another interesting tidbit about these taxation thresholds is that they don't adjust for inflation. Most every time in the IRS rules, there's always an inflation adjustment built in, meaning these numbers will get a little bit higher each year. This is one of the instances that I know of that these numbers are not inflation adjusted. They were put in place back in the 80s when $44,000 a year of annual income was pretty high. The fact that they are not adjusted for inflation means now that $44,000 of your retirement income is really not that high. So the fact that there's not inflation adjusted numbers just means that more and more people will be paying this tax. If you want to blame a certain political party in the 80s, it was Reagan and the Democratic Congress that put in the 50% tax. I think in the 90s it was Bill Clinton and the Republican Congress that put in the 85% tax. So really, no matter who you pull for, we're all to blame. Well, are there any planning techniques you can do to get your combined income below the limit? For the average person out there that is not a federal employee, there may be some planning you can do. If you don't have a pension and you're living off of Social Security and distributions from your assets, if you can get most of those assets from Roth, those distributions, well, they're not taxed. Then sometimes you can work it to be below some of these limits so that you're not paying tax on 85% of Social Security. But I'm sorry, if you're a federal retiree, with your robust pension and Social Security and the spousal Social Security, for a lot of people, you just can't help it. You're going to be over the $44,000 limit. So there's not much you can do about it. But There is some planning you can do about when to turn on Social Security. If you've been contemplating when to turn on Social Security, check out this video of 11 reasons to file Social Security at age 62. If you want individualized help, go to christycapital.com and click to talk to an advisor. If you want reasons why turning on Social Security at age 62 may be a good idea, then watch this video. My name is Tommy Neesmith, and we'll see you on the next video.